Hi everyone, welcome back to the channel. If you are new here, my name is Juliana or Property by Jules, and I help everyday people understand how to invest in property wisely and confidently through education, strategy, and real life examples. Now today, we're talking about one of the most common mindset blocks that I see with new investors. Should I wait for the right time to buy? Is now a good time? Or should I hold off? You might have heard the phrase, time in the market beats time in the market. Well, let's break that down today, properly, especially in the context of the UK property market. And I'm going to show you why trying to time it perfectly can actually cost you more in the long run. And stick around to the end. I'm going to give you practical takeaways that can save you thousands and help you move forward with clarity. So let's get into it. So many people are sitting on the sidelines waiting for a crash, waiting for the market to correct, waiting for interest rates to come down. And I get it. You want to be smart with your money, that's a good thing. But here is the problem. If you're always waiting for the perfect conditions, you'll probably never get started. Let's be real. Markets, the way they move, it's in cycles. They go up, they go down, and they go sideways. Trying to catch the exact bottom or the absolute best deal is like trying to catch the wind. It's impossible. Even experienced investors like myself don't always get it right. Well, what separates those who build wealth and from those who don't, it's like action plus strategy. So let's look at some real numbers to make this real. Scenario A, the 10-year investor. Let's say someone, we'll call her Sarah, bought her first investment property back in 2013. She wasn't a millionaire. She didn't time the market perfectly also. She just did her homework, spoke to a broker, scraped together a deposit, and took the leap of faith. She bought a 3-bedroom terrace house in Manchester for £125,000. At the time, people told her, prices are too high, there's a crash coming, wait for a better time. But what she done was smart. She focused on the numbers. The house she bought, she collected £650 a month in rent, solid cash flow, manageable mortgage, and the area had strong fundamentals like good transport links, local schools, and consistent demand from renters. Fast forward to now, 2025, that same house is now worth over £250,000. That's £125,000 in capital growth. She essentially doubled her money just by holding on. But it doesn't stop there. Let's say she increased the rent gradually over the years as you do, keeping up with inflation and demand. She averaged around £800 a month in rent over the 10-year period. That's about £9,600 per year or £96,000 over the decade, not including any uplift from switching to a higher income strategy like service accommodation or HMOs. She just got this from buying one property and holding it. And she made £125,000 in capital growth, £96,000 in rental income. That's over £220,000 in total gain, off a £25,000 deposit and a bit of courage. And guess what? Along the way, she refinanced it. In year 5, when her property was valued at £180,000, she pulled out some equity, around £45,000, and used it to buy a second property. That second property is now also cash flowing and growing. So now, instead of one income stream, she has 2. Instead of waiting and saving again from scratch, she let her first property work for her. Now that's the power of time in the market. It's not magic, it's not luck, it's just consistent action and letting compounding do its thing. And because she didn't overthink it, she didn't miss 10 years of growth. She gained freedom, options, and financial momentum. Meanwhile, scenario B, this is the overthinker. So now let's talk about the person who's on the other side of this dynamic. Let's call him Dominic. He is the overthinker. This is the person who has been saying, I'm waiting for the crash, and that's since 2013. In 2016, when the Brexit vote hit and the pound dropped, Dominic said, now the market's going to collapse. I'm going to buy after that. Then prices didn't collapse. They did dip slightly in London, but the rest of the UK actually kept growing. In 2020 now, COVID hit. Lockdowns happened, there was a global uncertainty. Dominic said, this is it. Property is done out here, no one will be buying. But what happened? Prices actually surged. Why? Because low interest rates, pent-up demand, people rethinking their home strategies, the market got hotter. Now, we're in a high interest rate cycle, and Dominic is saying again, mortgage rates are too high. I'll wait until they come down. But here is the twist. Property prices are adjusting. In some regions, sellers are negotiating and there are deals to be had. But the overthinker, Dominic, still doesn't act because they're chasing the perfect conditions, and perfect never comes. So let's give this some numbers. Back in 2018, they could have bought a 2-bed flat in Sheffield for £128,000. Today, that same flat could be selling for over £160,000, and in some cases even more. The rent in 2018 was around $775 a month. Today, it's closer to $1,200 a month, and even more on a service accommodation model. They could have refinanced by now, built cash flow, maybe even bought a second place. But instead, they are still calculating, waiting, and scrolling a right move in Zoopla. Overthinking, it isn't intelligence, it's fear dressed up as logic. And fear, if not controlled, becomes financial paralysis. What they miss is this: the longer they wait, the more they pay, not just in price, but in lost time, lost rent, and lost opportunity. Because waiting doesn't cost nothing, but it can cost you everything. You see, property rewards patience, not panic, not perfection, but patience. And I always say this, you don't need to be perfect, you just need to be in. If you had bought 5 years ago, you would likely have equity now. If you had bought 10 years ago, you would have options. But if you buy today, 5 years from now, you wish you'd have started now. So let's say someone buys property for £250,000. They rent it out for £1,200 a month, a fairly average figure in many parts of the UK. And even if prices, they don't shoot up, let's say they only grow by about 3% a year. In 5 years, that property could be worth over £290,000. They would have collected £72,000 in rent over those 5 years, and even more with increases. Now, compare that to someone who waited 5 years to time it perfectly. They missed out on £72,000 in rent. They missed £40,000 in capital growth. That's over £100,000 combined lost in potential upside. The biggest barrier, it's the mindset. People worry, what if prices drop after I buy? I hear it. What if interest rates rise again? Fair enough. What if I make a mistake? But here's the truth, you will never learn if you don't do. If you sit on the fence, how will you understand how things work? Yes, of course, do your research. Yes, get advice, but don't let fear of the unknown rob you of the wealth that you could build. There is no perfect time, there's only your time. And the sooner you start, the better your future self will thank you. So, in conclusion, you do not need to time the bottom of the market. You need to buy smart, hold long, and stay consistent. Focus on the strong fundamentals. And what's that? That's good location, solid yields, long-term demand, and the strategy that fits your life and your budget. That is how you win. Because in the end, it's not about timing the market. It's about time in the market. The longer you're in, the more you benefit from rent, capital growth, refinancing, and a leverage, which I spoke about in my last video. If you're watching this, that means you're already ahead of most because you're learning. So now your question is, what will you do with this knowledge? Do you want to be a Sarah or do you want to be a Dominic? You choose. Will you keep waiting or will you take action wisely, strategically, and confidently? If this video helped you shift your mindset, please give it a thumbs up, subscribe to the channel, and share it with someone who's been sitting on the fence for way too long. Let's build wealth together the smart way. And I'll see you in the next video. Take care, guys.